Good day, everyone. This is Gary Ander from ShrewdTrading.com. We're going to look at gold, but before we do, I want to take a look at the dollar index. We're in this environment right now that I've really never seen before, with so many traders that I talk to just worried about what Ben Bernanke is going to do, what he's going to say in Jackson Hole. And this has been going on for a long, long time. So many traders just waiting for some news about QE. Any data that we get that's bad, people buy in the market. Any data that we get that's good, people are more willing to sell in the market. I've never seen an environment where it's so QE orientated, as if that's the only thing that matters in the markets. And what ends up happening is what we've got going on right now, where the markets are going nowhere. Here we see the dollar with money printing, with more QE, it's going to push the dollar lower. And as we get closer to this Jackson Hole, people are more willing to sell the market, thinking that Bernanke is going to do something there or say something there or be willing to print more money, in which they'll sell the dollar more. We see the dollar is at support right now. If it breaks through the support, the dollar will go lower. Stocks should go higher. But what we're really talking about here is gold. Before we go to gold, let's just take a look at what's happening in the S&P 500. We see small trading day, another one, a couple more, a few more up here. Today, yesterday, right now it's the 28th of August and it's about 3 o'clock in the afternoon. And we have absolutely nobody willing to trade. The volume has been horribly low. Right now the volume at 5 after 3 is 321 million shares. And we've been around the 500 million share volume for quite a while. So nobody's stepping forward, nobody's trading. Right now everybody's waiting for the Jackson Hole, and this is far from a normal trading environment. What I really wanted to talk about right now is gold. So we see, if we start on the left side of the chart, gold was in a downtrend. It found a low, and then it developed this triangle that we see. Right now we broke out of the triangle. We'll look at that a little bit closer in a minute, and we work our way up to the swing high that we have here. You can see that I've drawn a trend line at this swing high, at this swing high, at this swing high, and then up here as well. We have these trend lines that represent potential resistance in this market. If we come a little tighter on this and zoom in, we have the very clear triangle from here. We see the nice breakout of this triangle. We move up towards that first resistance point, and for anybody who is in the Shrewd Shout box, part of ShrewdTrading.com, knows that right about the top here, I had suggested that gold is probably not going to go any higher, and it might be a good time to come out of at least some of that trade, if not all of that trade, and look for another place to reload that long trade. We see that gold went from about 1590 up to about 1680 in just a short number of days. So it had a really nice move higher. And when it got to this resistance level, it did exactly what we would expect from a technical standpoint, and that's back off before it breaks through this resistance. If we zoom out on this again, we see the triangle. We could actually measure this triangle and say that the height of the triangle, if we duplicate this to the breakout level, it's going to head up towards that 1725 level. So that would be the measurement that we would derive just from that triangle that we broke out of. It's possible that this can happen. Now, what I was expecting was for a pullback to about 38% retracement of this last run. So from this low up to this high, if we pulled back to somewhere between 1645 and 1650 is what I've been saying, that might be a good long trade if and only if we get bullish action in this area. We see that really hasn't happened yet. It's been holding right around this resistance level, and it could continue to do that for the next couple days. The one thing you have to keep in mind if you're trading gold is what the reaction is going to be to whatever Bernanke has to say on Friday. If he talks about QE, if he promises QE, if he says that they're going to do something, gold's going to go much higher, because that means he's printing more money, which will end bad in the end. But at least for right now, it's going to make gold go higher. If he comes out and says, we're not going to do any more QE, which I doubt very much that's going to happen. But if he did say that, we'd see gold go much lower. We know that gold's going to have some type of a reaction, probably a decent reaction on Friday, as is the dollar, as is a lot of the Forex pairs. because you've got so many people just sitting here waiting for what is Bernanke going to do. Anytime you turn the financial media on, that's all they're talking about is QE, QE, and more QE. So what we have to do is use this to our advantage. How are we going to make money off of this? And a pullback to this 1645 to 1650 level with the right price action at that level would be a good entry point. And if it moves up from that level, we'd want to get a stop loss on just in case he says the wrong thing that's going to make this gold trade go lower. We also know when we have a triangle like this, oftentimes it comes all the way back to the triangle. That's another possibility, and we see that's right at about this 62% retracement right in here. So that's why I say we have to evaluate the price action around this 38% retracement level, because it might want to keep heading down before it bounces. Maybe this doesn't even set up well until after the Bernanke speech on Friday. But we've got a lot of markets not moving right now. I showed you the S&P at the beginning of this. Gold is one of the markets, at least in the last week or so, that has been moving. So let's pay very close attention to gold and look for those entries at the support levels, because gold's had a nice bullish move in the last couple weeks. And I'd like to be a part of the next leg of this gold move. When you have an opportunity, check out shrewdtrading.com, and our goal is to keep you on the right side of the trade. This is Gary Ender. Good trading.